Well, everybody, thank you for attending my webinar. I'm going to keep it short and sweet. I know we all have a lot of things to do. I try to keep my webinars under 30 minutes. Most of the time, I am successful. Come in at sometimes 20 minutes, 25, sometimes at 32, 35. So let's get going. This is going to be an interesting webinar. It's leveraging seller concessions, high prices going on right now, high interest rates, buyers having to pay commission. Things have changed, so it's kind of challenging times. But we're gonna attack them right now. We're gonna address these issues right now, and leveraging seller concessions is going to help a lot. Anyway, I'm not here to be a vendor. I'm going to be your partner. I will hold your borrower's hand throughout the whole transaction. I do have a team. I have processors and underwriters, but I am involved the whole way. So I am not just a vendor trying to get your business. I am also your partner who wants to work with you in your business. Okay. What do we talk about today? We're talking about concessions versus buy downs. We're going to talk about why concessions matter, how seller interest rate buy downs work, concession scenarios, and how can you leverage seller concessions. Very interesting stuff. What are seller concessions? Seller concessions are payments made by the seller to cover certain costs or fees typically associated with purchasing a home. A seller concession is a financial incentive offered by the seller to make the property more attractive to potential buyers. So, if there's financial incentives or if they can lower the payments, the buyer is going to be attracted to this particular listing. Here are some examples of using a seller concession. For example, on the closing costs, these can include property taxes, appraisal fees, title insurance. The goal is to make the deal more appealing to buyers who may need financial help to cover all these upfront costs they're going to have. They're also good for repairs. Instead of completing the requested repairs, the seller can give a credit for the buyer to complete the repairs after closing. And also, the seller concession can be used to pay the buyer agent's compensation, which is, I'm sure you want them to get paid, right? Us buyer brokers want to get paid. What is a seller paid rate buy down? A seller paid rate buy down is a contribution by the seller to lower the buyer's mortgage interest rate, either temporarily or permanently. So let's say the rate's at 6.5. A seller paid rate buy down is going to bring down the interest rate depending on what they choose. If they choose what's called a temporary buy down, what it does, it reduces the interest rate for the initial period, which is 2 years. A common example is a 2-1 buy down, where the rate is reduced by 2% in the first year and 1% in the second year. Then it returns to the original 6.5. So go to 4.5, 5.5, then 6.5. There is another type of temporary called a step rate buy down, which adds another step to the process. So, in the temporary, the first one I told you about, there's a 2-1 buy down. There's also a 1-1 buy down, a 1-0 buy down, a 3-1 buy down. In this case, we'll talk about the step rate buy down, which is a 3-2-1 buy down, where the rate is reduced by 3% in year one, then 2% year two, then 1% in year three, then year four, it goes back to the initial rate. So in this case, for example, a 6.5% we talked about will start at 3.5, then 4.5 in year two, then 5.5 in year three, then we'll go back up to the initial rate of 6.5. Uh, the permanent buy down. The permanent buy down involves a permanent reduction in the interest rate for the entire loan term on a 30-year fix. So we're you're bringing down the interest rate for the entire 30 years. It's usually achieved by paying a mortgage points. They're called discount points. I'm sure you've heard that before. You pay that up front. So each point typically costs about 1% of the loan amount and reduces the rate by about a quarter of a point. Sometimes it's an eighth of a point, depending on the lender, but traditionally it'll be more like a quarter of a point reduction for every 1% of the loan amount paid upfront. We'll do a little quiz right here. Which lowers a payment more, reduce the asking price or reduce the interest rate? Well, Well, let's take a look and find out. Well, here's an example of the impact a seller buy down can have on a payment versus reducing the price. Let's look up here for a moment. Right here, the price is 6.75. Price reduction. If we reduce the price by $25,000 at six, so it'll be 650. There's going to be a savings of $139, 140 bucks. If we keep the price, the asking price, we offer the same asking price, but we do a 2-1 buy down or any kind of buy down. In this case, we're dropping the rate a little bit over a point. We bought the point down. We bought this rate down. We're going to save $316, $317. The buyer is going to save $317 a month. If you want to achieve the same savings by reducing the price, you're going to have to reduce the price to 617,500, which I seriously doubt any seller would accept. So they're better off just doing a reduction in the interest rate to save. That's a lot more attractive for the buyer and the seller. Here's just an example of the 2-1 buy down I spoke about. Starts at 6.5, then goes up to 5.5. I'm sorry, starts at 4.5, then goes to 5.5, then it ends up back at 6.5. What do sellers want? They want certainty. They want to make sure that this property is going to close, the sale is going to go through. They don't want to tie up the property for 30 days, 45 days. It's just not going to happen. They don't want that. So they want certainty. And they also want, they have a figure in mind that they want to net. So they want their net proceeds. That's all interested. They want to make sure it closes, and they want to get their net. So in today's real estate market, the high interest rates and changes to buyer agent compensations are challenging for the both agents and also the buyers. And the seller concessions or rate buy downs can help in three ways. Affordability. Seller concessions and rate buy downs are the number one way to reduce payments and increase affordability for buyers in today's market. It also can help with buyer agent compensation. Seller concessions are one way to compensate agents when a buyer can't pay the agent out of pocket. And the third one, it makes deals happen. Seller concessions and rate buy downs help make listings more attractive and move inventory. Things are getting a little bit tighter in the market. Used to be a no questions asked seller market, but now it's a little bit more challenging. There's less buyers out there because the interest rates are higher, so there's less demand on the properties. So we've seen some listings kind of reduce prices a little bit because there's not that much demand as there was before. It's still out there, but it's not as much as before. So we all agree that how you structure the deal has a lot to do with how the offer is going to accept it. Well, I'm going to tell you how our team is going to help out. We're going to prioritize the buyer pre-approval. We're going to make the buyer jump through hoops to get them pre-approved. When you get one of your buyers pre-approved by us, you can be pretty sure that they're going to qualify for this loan because we have checked everything. We checked employment, we've checked assets, we've checked credit, we've double checked, triple checked everything. So once we feel and prove that this person can close and get the financing for this particular property at this particular price, and then it's almost like gold. We have a guarantee that if we don't close due to our fault on a closing on the closing date, if we can't close on the closing date, we will pay the seller $15,000 and we'll pay the listing agent $15,000 if it's no fault of ours. If it's our fault, I'm sorry. If it's our fault, we'll pay $15,000 to the seller, $15,000 to the listing agent. You got to price your offer to win. The days of just starting off really low and getting a counter offering, coming back up, and there's no time for that. It's still too competitive. Sellers are still have the upper hand. So you price it to win. Price like you really as high as you can go to get this property. We have 5-day loan approval. So in your offer, you're going to structure that your buyer is already pre-approved. almost gone through underwriting already. We can close this particular deal in 10 days or thereabouts, sometimes 14, but we can do 10, sometimes even less. We've closed in 4 days. So we can make things happen. And also, what we want you to do is, I don't know how you work with other lenders, but whenever you present an offer, we'd like, with your permission, we'd like to call the listing agent to kind of talk to them a little bit about the borrower and why we approve them and for how much, and to really reassure them that they will qualify for this loan and you're not wasting your time with the seller. Okay. So we will reach out to the listing agent with your permission, of course, and let them know that this buyer is good as gold. You can either text us the offer or you can email us, and we will also put that in writing to the listing agent that they will pretty much guarantee that they're going to close. So we have the $15,000 guarantee to them, $15,000 guarantee to the seller if we do not close on time. Buyer brokers. So what's your plan if the seller doesn't offer compensation and buyers can't pay your fee? I'm sure that happens quite a bit now. So, for example, let's say you have a buyer who found a property and has agreed to pay you 3% commission. Okay, found a house for $500,000. The asking price is 500. The initial offer is 490,000, with the seller paying a 3% credit for the broker commission, the buyer's commission. Then the seller will counter at 490. They'll pay 2%, but you're still missing 1% credit from the seller to pay your commission. So you're still out $5,000 as the buyer's broker. So what can we do? What we can do is we can offer $495,000 and still and still ask for the seller credit of 3%. Like we mentioned before, the seller wants to make sure the property is going to close, and the number two is they have a figure in mind, and this with this offer they will get their net, so they have no reason to say no. They got their net, and they're going to more than likely close on time. I'll show you. I'll show you a little bit of difference of the purchase price. So the 490, the seller did not agree to it, uh, but they did agree to 495. It's only going to cost the borrower $25 a month extra, and closing costs about $1,080 in the closing cost to make this deal happen. So who wins? Everyone wins. The seller wins. They're going to get their net, and they're going to close on time. The buyer gets the house they want, and the agent wins because you get your desired compensation. It's a great thing. What agents are saying, this is what I hear agents say when it comes to price reduction versus interest rate buydowns. They tell me price reductions get attention. The MLS Zillow sent price reduction alerts, creating new interest in listings. Both are true. However, agents can add remarks in the property description, such as seller offering a two one interest rate buy down to lower the monthly payment, highlighting seller willing to buy down the rate, reducing your monthly payment should be prominent in any listing description, in any kind of marketing that you have. Promoting a seller buy down is part of marketing a listing and your content strategy. Seller willing to buy down the rate, reducing your monthly payment should be prominent in any of your marketing pieces. Or you can offer a combo. So a combo concession, a small price reduction with a seller interest rate buy down credit can be a winning strategy as well. We will team up with you. Um, we'll put your picture here and my picture. We'll co market flyers that we have promoting the 2-1 buy down, for example, that you can send out to your potential buyers. And we're there to do that for you. So we will help you with that. We'll create that flyer for you for free. Here's a little sample of an ad that somebody had put out that we found a while back. The seller is offering 7,500 in closing costs or interest rate buy down. That catches the buyer's attention, no doubt about it. So that kind of, if that's your listing, it's going to stand out above the others. There is no change to the seller concessions allowance post NAR settlement. Seller credits are allowed in addition to buyer agent compensation. It's all legal. It's all upfront. Fannie Mae, Freddie Mac approve it. We approve it. So this is all good. It's a great way to solve a problem and reduce a lot of stress that a lot of people have. Here's my contact information. Feel free to reach out to me with any questions. You can scan my QR code to get my information into your phone. I'm here for you guys. Any questions? Again, I go through these webinars kind of quickly. Be more than happy to answer any questions or walk you through the hand or re-explain everything to you. No problem. And I want to thank you for attending, and I'll see you in the next webinar.